Welcome to episode 7 of series 3 of our OR Talks podcast. Today we'll be joined by a very special guest to discuss international tax. Here are your hosts, Neil Seeger
and Mark Jovanovic.
Thanks for joining us, and you'll notice we have a very special guest. Not only is he a special guest, he's a first-time podder.
I am indeed, thank you.
Welcome to the pod.
Thank you.
So you can introduce yourself. I'll let you introduce yourself.
Oh, thank you. I'm Nick Farmer, and I've been with Ormer Rutter for 4 months now, and I'm a senior tax consultant specialising in international tax.
Wow. So we're going to find out what that actually means. So obviously I see overseas tax as an absolute maze.
Yeah.
So when we talk about overseas tax, and in fact, actually an easy way to word it, what common mistakes do people make with overseas tax?
Many people who are resident and live in the UK are definitely here in the UK, live here all their life, might have assets overseas that produce income. And you've got to remember, in the UK, you are taxable on your global income. And people might not declare that. And often, if you're just employed and you're doing PAYE as normal, and suddenly maybe you inherit a villa abroad or something like that, and you've got some rent. Be nice, yeah.
Actually do.
Inherit a villa, and suddenly you've got some rental income. You'll pay tax on that in, say, Spain, but you also need to pay tax on that in the UK. And people think, oh, I'm just paying it in, I won't do that. But if you're here, now you've heard of non-doms and what's happening here, that's for people coming in who aren't from the UK. But if you are born and bred in the UK or you've lived here for a long time, you pay tax on your global, worldwide income. So if you've got shares in Australia, using dividends, you might have an Australian bank account, all those sort of things you need to declare. And those things will pull you into self-assessment.
Right.
Yeah. Whether it's very low amount, you still need to declare it. Currently, you've seen with the worldwide sort of exchange of tax information, if you deal overseas, they'll ask for your tax identification number, your TIN, which is your UTR number here or national insurance number, which you have to give to, say, your bank overseas. So there's nothing wrong or illegal with having a bank account overseas as long as you declare it here. There might be a legitimate reason.
Declare the interest on it.
Yeah, declare the interest and the asset, obviously, so there's nothing mysterious about that. And it might be you have a reason because maybe you lived in that country for a short time and you have a bank account, you've got some cash there. But what can happen is you can pay tax in 2 different countries. So you're paying tax on it in the UK and you'll pay tax on it in a foreign country, say Spain, as we said. So you'll pay the tax in Spain, but when you go to pay the tax in the UK, you'll get a credit for the tax paid in Spain. So depending on what the tax rates are like, that might wipe it out, or you might owe a bit more. Or
one of the things I hear quite a lot is people say, well, I don't have to pay tax on it in the UK because I pay tax on it in Spain, and I'm a PAYE person here, so I'm an employee, so I don't have to pay tax in the UK.
And that's the issue. I mean, just say you're a fabled person, say Mark's inherited a villa.
Oh, well done, Mark.
Because we think we can all go on holiday. He's got it on Airbnb, he's running exclusive parties, whatever he's doing, he's got income there. And just say you don't work, you're living on your investments and you haven't got a salary. So you've got your personal allowance and you can set that off against. So somebody might think, oh, I'm under my personal allowance, but you should still declare the foreign income, even though you might not pay tax.
And the personal allowance is the 12,000.
Yeah, 570. Yeah,
everyone gets.
So you're going to suffer the tax in Spain, and then you've got to pay here. Now, if you're working here and you're, say, a 20% or 40% taxpayer, that income will go on top of that. So it could take you from 20 to 40. You might be 40, or if you're in 45, you'll be paying 45% on that. And depending on what the rate in Spain is, you might be paying a bit extra here, and obviously you've got euro pound conversions to look at.
Yeah. So what happens when people don't do it? There are penalties from HMRC. They don't.
Yeah, you can be. It's not declaring income, and you'll see all these reminder letters going out as more information comes around. Now, countries like Spain and the United Kingdom will have an exchange of information. As property now in the UK, when you go to rent a property, whether you be UK resident or foreigner, non-UK resident, they will ask for your tax details. because they have a liability to notify. So the same is happening abroad. So it may be that the Spanish authorities will notify, okay, UK resident, Mark's only got a villa. Oh, right, and put it in his tax return. They'll send you a nudge letter.
Yeah.
So it is very important. If you've
Yeah.
got any assets overseas to consider whether you need to pay tax on us.
Yeah.
Give us a call. We can.
Penalties can be quite harsh. I think they go up to a maximum of 200% for not declaring it. So
Yeah.
it's well worth, if you're in any doubt, coming forward.
So
And
that's
then you've got
200%,
interest as well.
200% of the tax liability.
Yeah.
Right. So it's not 200% of the interest,
No,
obviously,
no,
just the tax.
If the tax, yeah,
Right.
that should have been paid.
Yeah.
And plus interest, as you've already
Yeah.
said.
Yeah. All that.
So it's all, and if you have got it historically and you haven't, and you haven't declared it, something to be scared of. We can obviously, work with the revenue and work with clients with that.
And by coming forward as well, they normally reduce the penalties down for
Yeah.
you. If they come knocking on your door, they're harsher.
So it's a voluntary scheme.
Yeah, exactly.
Right, go back and use the voluntary. So yeah, anything you've got bank interest, rental income, dividends. Now, if you've got dividends and they're flowing into your UK bank account, they'll show up and should be seen. But anything like that, any income around the world that you think, and the next point, I suppose, is to say capital gains tax. So if you sell your villa, because you want to buy a racehorse in the UK, going to buy a racehorse,
Definitely.
sell a villa in Marbella, he's going to sell that. You're going to pay whatever the capital gains tax is in Spain. But you're also subject to capital gains tax here and the 60-day rule to declare it, etc. So, and again, the netting off. So you look at you've heard of double taxation treaties, that was set out, how it's done. But you'll basically get a credit for what's paid in Spain. So again, you've got to remember capital gains tax if you sell it.
So if let's just say, for the sake of argument, the Spanish tax rate's 40%. Let's just say, right, and I'm a 20% taxpayer in the UK. So on the income in Spain, I've already suffered at source 40%.
Yeah.
Do I then get a refund of the 20% discount?
No.
So if I've got it in a country where the tax rate's lower, all the same, that's great. Because
that's great.
But if I pay more in a foreign country, I won't get a refund on my tax return.
And that's why it's important to take tax advice in that country, because there might be reliefs for foreigners owning property or owning something. There might be schemes there are in Spain, various schemes. They might advise you to own it through a local company or own it in person, etc. So do a bit of planning.
Because that links into what we spoke about last time on the podcast before, really, about our overseas accountant links and all that sort of stuff. But I didn't realise that. So you don't get credit.
Yeah. Well, if you look at it this way, the UK aren't going to refund you tax that you pay to Spain.
Yeah.
Okay, no, Spain's cool, aren't they? Chuck us 20 quid.
It's not like the European VAT system where they'll send some money back and
moving all around.
It's lost.
That's something we need to remember, that isn't it? Because some people will think that actually, they pay tax in Spain, won't submit anything. It's 40%. I'm only a 20% taxpayer here. I'm not going to get the tax back that I've paid. But actually, you won't pay any more in the UK.
Exactly,
So there is a benefit there.
Hopefully, if it's your only asset there in that country, you'll have all the various lower limits, which will hopefully ease it. But it depends on the tax system of the country.
So the one thing I've had recently, unless you've got something before, so the one thing I've had recently is I've had somebody, a client of mine, who's come over from Ukraine. Okay, and they came over from Ukraine. So I think it was somewhere in the region of about May last year. Okay, so May 2023. So they're in the tax year 23, 24. So they're then a UK resident they're in the UK living for a proportion, and a Ukrainian resident, I suppose, for a proportion. They're self-employed in both countries.
Right.
Why do they have to declare their income?
Good question. And very tricky. So to go back to the first part, we always get back to what's called the statutory residence test.
Okay.
Years ago, there's more different laws and there was a bit of leeway. So HMRC have put in place a statutory residence test. You can go on the web, put in statutory residence test HMRC and run through it. It is highly complex and many tax accountants get mixed up in it.
Okay.
It's simple, so you can follow it through, and it all depends on the time you spent here, what type of job you've got, or whether you're self-employed, and your ties to the various countries. Now, for that instance where he's come over in May, it's highly likely that he'll be resident in the UK from the point he arrived. His income, if he stopped working in Ukraine, at that point he'll start working in the UK, Obviously, we don't know what the Ukrainian tax rules
Yeah,
are,
yeah.
and when the tax year runs. But that Ukrainian income on a split year may not be taxable in the UK, depending. So you might have to pay UK tax on that.
Because I'm seeing it more and more
Yeah.
people, you know, sort of relocating here. And on the flip side of that, I've seen people come sort of work in the UK and then go into. I've had one come not so recently going to Saudi Arabia to go and work. And
Yeah.
Saudi Arabia rules are very different to our rules from a tax point of view. Obviously, I think are they nil?
They don't pay income
It's
tax.
nil. There's no income tax. So you're.
So if I go and work so today, I decide that's it. I'm going to be an accountant in Saudi Arabia. Off I go.
Yeah.
My income in Saudi that I'm earning for the rest of the tax year.
Yeah.
Is 0% over there.
Yeah.
Do I then have to do anything here because I'm still
resident? Are you resident? How long have you been?
So I've been here since birth. My wife lives here. My son lives here.
How long have you lived in Saudi? Do you spend the whole tax year out of the UK?
Oh, I'm going today, and I'm going to be there until the 5th of April next year.
Nice and simple.
What are we in now? Obviously, we're in 31st of July, aren't we? So we'd have to look at split year rules. I think if you return back, and it depends on some of your cases what you return in the UK. If you return back, that will be taxable in the UK.
Yeah.
If you stayed out for the next tax year, then it wouldn't be. So it's very important when you say come back into the UK. I had a client who decided to return to the UK after many, many years. And his family had already returned to the UK. So he had a tie here, but his kids under 18 in school, he had a house available to him. So there's all these markers. And then he was coming back in, and it was actually better that he didn't come in till after the beginning of December. So he waited a week after, because he left a job overseas and got a payoff from that job. And that would have been taxable in the UK if he'd spent more days here. So he waited a few days after what we calculated. Otherwise, his payoff, which was substantial, would have been taxable in the UK. As it wasn't. He paid his tax overseas and he could bring it back in. But if he'd have missed it by a week, he could have suffered 45% tax here.
Yeah, people always get confused between residency and tax residency, don't they?
Yeah,
they're the same thing.
They're not
completely separate rules, aren't they?
And now, so I would always say before you either exit the UK for a job, take advice, and also advice in the country you're going to, which, as you said, we can find advice for you through our Morrison network. I've just been dealing with Portuguese, Spanish, and Thai tax advisors for people finding out that, and I found them all through the network, which is great. The other thing to think about is people coming in. So we've got companies who are bringing in foreign staff, is to consider the timing of bringing them in, and are they bringing their family in, single, or they children, all their ties, etc.
And all these things make an impact on their status.
Their earning. So the one thing you might have seen recently, which has just been announced yesterday, is this controversial, the non-dom tax regime.
Yeah.
So the previous government said they're getting rid of it, the present government are getting rid of it, and they've announced it. So this was interesting for non-doms, and you can have a political argument about how much money it brings in. But the other side of the coin was, I thought about, what about people like us? If we leave the UK, when do we lose our domicile? You mentioned residency and tax residency. The other thing is domicile. And domicile traditionally is where your father was born, but you can choose your domicile. So if you lived in the UK and you've only been in the UK, your father was born here, you're UK domicile. And it's hard to lose if you move abroad. And you have to do positive steps to do that.
Yeah.
So I'm thinking about, what about people, especially those who are retiring, who've got assets and are wealthier? What happens if they move offshore? They decide to go in Spain, Portugal, Gibraltar, Mauritius, wherever, maybe some very low tax jurisdiction. You'll always pay inheritance tax on your UK immovable property, which is buildings. You can't get away from that, even if you're a foreigner not living here. You'll get caught in there. But things like you move your cash, your bonds, your investments, foreign property, whatever it be, outside the UK, how do you get out of inheritance tax? Now, before it was the domicile principle, which was very difficult, and people thought, I'm okay, I'm abroad.
Yeah.
So now, cancelling non-dom, I thought, that's going to have a great effect for those moving out. Suddenly, it's on residency, not domicile.
Yeah.
So tax residency. So suddenly, second year, I'm out of the UK. No IHT for me. So what they said yesterday was there's going to be a 10-year rule. So once you're away for 10 years, you're out.
Yeah, I think that's still.
So you can't suddenly think, unfortunately, I'm very sick. You know, chance I'm going to die. I'm going to nip over to Gibraltar because there's no IHT. Spend my last 6 months there, no IHT. It's a 10-year. Sorry,
yeah.
Mark.
I think they're getting a bit more information about IHT, aren't they? The Americans very much income tax, capital gains tax, and domicile. The rules for IHT haven't been sort of how they're going to change.
They're asking for comments to come back.
Yeah.
And how it will work. And for the interestingly, for that non-dom rule, for those, the non-dom thing was always to help workers coming in. They also use the term American bankers coming to London for 3 years. You know, they've got assets in there. They just pay tax on their UK salary, which was a good principle to attract people in and out. And obviously, it's been a political hot potato. So what they said in these new rules is there'll just be a 4-year. You come in 4 years, you won't pay tax on your foreign income, then you'll pay tax on it. So if you're coming into a 3 or 4 year contract, you don't have to do a tax plan, you can just leave it like there. Interestingly, America is somewhere where wherever you live in the world, you pay tax on back in America. It doesn't matter where you are. So
really?
Yeah,
no.
They're quite harsh, aren't they?
And when you go to renew your passport, they'll ask you where your tax return is.
Oh.
Yeah.
I mean,
so interesting. People who are born in America gain their US domicile. You have to actually get rid of it. So, famous person born in America, I think recently, Boris Johnson. His parents were working in New York. He was born there. So you have to go and say, I'm really British, which is easy for someone because they move back.
Yeah.
But if they see you're born in America, they'll try and hit you with tax. So domicile, residency. So the residency should be much easier. They're going to use the statutory residence test. There's no grey areas there. You can just look at that and say, yeah, I passed that test or I failed that test. Go on to the next test, work your way down, and you've got a conclusive answer. Obviously, your situation might change from year to year.
Yeah.
You have to update it, but that's it. So if you are moving country, do the planning before you move country. It may be worth selling assets, taking a CGT hit where you are, rather than going to the new country, taking a bigger hit. It may be the opposite, and you've got to move out. So thinking about all those sort of things, thinking about your pension pots and how they'll be treated.
It's a good point, actually. If you're looking to move to retire, I mean, obviously you've got the IHT side of things, but you've also got the tax on your pension to think about.
So you get your 25% on your lump sum limit capped at 268,000. Just say you're resident somewhere else, they might treat that as income.
Yeah,
it depends. Now, most countries with the tax treaty and Commonwealth countries, they'll probably treat it as lump sum. But why not do it in the UK before you go?
It saves any question marks, then, doesn't it?
And the thing to do is get an NT code, no tax code. So you go to the revenue on your pension. So your pension provider will you'll give them the NT code, and they don't have to deduct any tax in the UK, because otherwise they'll deduct tax on an emergency code or basic. Yeah. You can claim it back, but it's cash flow pain. You've got to engage in an account to do it. And then where you're resident, obviously you'll pay tax at whatever that rate is there. So if you've moved to a low tax jurisdiction, we often give maybe benefits to pensioners. You're in a better position. And the same with your state pension. And that's normally paid gross anyway. But you remember, just because you don't take those pensions into the country, you probably still pay tax where you're going. Yeah. You might be on a remittance basis, you might not. So a bit of planning.
It depends on all different tax countries, how all
the so you've got to look at both sides. On one side. So if you leave it afterwards, then when you go back to retrospectively to HMRC, it doesn't normally go well.
Yeah, it's same with rental income as well, isn't it? If you live abroad and you rent your home out in the UK, that's still taxable in the UK.
Yeah, how many people get caught out by that?
That's the next thing on my list as well. You beat me to it, because you see it quite a lot. Like, for example, I go and take, let's just say I'm got a really good job as a doctor. Okay, and I go over as a doctor.
A doctor?
Yeah, absolutely. In my spare time, I'll train as a doctor.
Sorry,
you wouldn't trust me with your surgery, then, no?
No.
Oh, Mr. Farmer, do you want a hip surgery?
I don't need it. Are you kidding? I've got a bad hip.
If you fly over to Dubai with me, right, with my new job,
Yeah.
so I'm earning, ridiculous money over in Dubai as a doctor,
Paying 0%
paying
tax.
zero tax. I then basically buy a property. So yeah, I rent my house out, right? So it's a UK property. It's it's being rented in the UK, but I'm only renting it out for £1,000 a month, right?
Okay.
And I picked that number on purpose.
Because it's under 12,570.
Correct. So I rent it out for 12 grand. Okay. The money, I'm over there working. Okay. The house it's just bringing money. I don't take the money over to Dubai. I leave it here in a bank account building up. So then do I have to pay tax here?
On that rental? Of course you do. Any income from a movable property, which is basically buildings, whether it be a office, a warehouse, or your home, you have
£1,000 a month. So if I'm over in Dubai working, do I keep my personal allowance in the UK?
You should do.
Okay.
If you're a British national, yeah.
Yeah, so it's me. It literally actually is me.
You'll still need to do a tax return note to notify them, but you won't pay any tax.
So I don't have any tax to pay, but I still have to declare it.
Yeah.
Because that's where people get caught out a lot, isn't it?
Yeah, and the other thing is, if you're renting that through a letting agent, for example, unless you tell HMRC that you're a non-resident landlord, they have to deduct tax at 20% from you. So you have to tell them that you're non-resident and that you're going to submit a tax return to receive the rental income gross.
Okay, really?
Yeah. I mean, you can reclaim it. Again, it's a...
If you're not going to have to pay tax on it because it's under your personal allowance, you may as well tell them up front that you're a non-resident landlord.
And do I have to get other additional documentation or just have to notify them?
You have to notify them, so they'll issue an NR. It's called an NRL1 form, basically. So
they might ask for your tax number in your foreign country to prove that, and they can check these things pretty much. Same as the pension, so rental income.
Because that's one of the biggest things I see people get caught out with. It's receiving interest, or you've had a great grandparent, set up an account abroad which is receiving interest, which is in your name.
Yeah,
that's quite common. Yeah. And the other one is the rental income is very, very common. I'm seeing that quite a lot.
So, and obviously allowances aren't going up and rents are going up.
Yeah, my example was definitely gross hints.
This supposed doctor's house, which is only renting for a
it's my student one.
Let's just say this. Yeah, let's just say you've got your mansion by the golf course somewhere down in Berkshire somewhere, and you're renting.
How do you know about that
one? £5 a month or something.
Yeah.
Obviously, if you're married or in a civil partnership, make sure you split with your partner. Because they can use their personal allowance, you might, get double bubble.
Okay.
Think about that, depending when they're, presume they're with you. Obviously, you won't pay any tax on that in Dubai, so you've got 0% tax. So you're happy.
That's all about it.
So but you will pay UK tax on it. The other thing to consider, which is a small point, you're going abroad for a few years. Think about your national insurance contributions. Think about if you want to make voluntary contributions to keep up your contributions. So you get a state pension. So you could do voluntary contributions which are less. And I know all the class 3 and 4 changing there is a class, but if you're overseas, it's less. And you can keep your state pension topped up. How many years do you need to do? 35, 40?
I think it's 35 now.
35. So, it could be, especially, you might not think the state pension is going to be worthless, but every IFA I've spoken to, and we're not IFAs, said it's worth paying that. You get it back within 3 years or whatever.
Yeah, I think that's a fair point. I think it's a really important point to note, isn't it? Because when you're working abroad, you think you're still working and you're renting a property here, but you won't ever consider that you're missing the contributions.
So we recently had a client who has moved abroad but has a UK company and takes their 12,570 salary in the UK company. They've got other foreign income. They are definitely resident abroad. I said, why did you do that? Because you'd rather cut your ties. They said, I like to pay the national insurance just to keep it up. I said, well, you can make voluntary contributions, stop paying yourself a salary here.
And paying tax on it.
Well, you're not, but
No, but over there.
Exactly.
Assuming they're not in
and then just pay your voluntary national insurance contribution. You calculate. You can either put in your tax return or pay. There's a system to pay over.
Yeah, it's all changing, isn't it, at the moment? So,
because the voluntary class 3's gone or changing or whatever. So that's a good thing to think about.
Very good point.
Obviously, when you do move abroad, things like ISAs, you can't contribute to your ISA because you're not tax resident here. but you can keep your ISAs and they can carry on being invested under the tax-free rules. And when you come back, you can start going back in. But if you're not tax resident in the UK, you can't contribute 20 grand a year to your ISA. But then also consider, if you're going to Dubai, you're okay, generally, because there's no capital gains tax or anything. Not that we give foreign advice.
No,
but if you're going to France or Spain, that ISA might not be tax efficient there. They might treat that. So that's another thing to consider.
It's all about, I think the word mark is your favourite thing, isn't it?
Forward planning before you go, looking at the options, don't miss out on them. Once you've got it, it could be too late to change it.
Yeah. So always think about your pension, talk to obviously your pension pot stays outside for IHT, but you don't know how it will be treated overseas. It's just you might just leave it there. And then, of course, if you're moving overseas and you're not tax resident here, you can't contribute to your SIP or whatever and get the tax advantages because you're not resident.
The swings and roundabouts, isn't there?
Yeah.
Just depends on, I mean, in the day, if you've got
if
to
you're
go
surgeon in Dubai, I think you'll be
well,
making it.
you never know. These things have to be considered, don't they?
Yeah, and doing tax is only one part of it. Like I say, being over in Dubai, earning what you're earning there might outweigh what you're losing in tax.
Yeah.
Yeah,
it's all about assessing those numbers, isn't it? And actually, I use Dubai. It's an easy one. We all know it's low tax, but it's actually it could be completely different if you go into any other country, couldn't it?
You just mentioned renting your house out when you go abroad. Private residence relief.
Yeah,
you're not living there.
True.
So there are allowances for when if your company make you go and work abroad or send you abroad and give you accommodation over there, you can get relief. So your deemed residence will be your UK property and you keep your residence relief. But if you were to go abroad for a long time, stay abroad, and actually it's not because of work, then you come back, say it's a 10-year stretch, and then you sell it and you've lived there for 10 years and you're away for 10 years, you might get a 50% reduction.
And this is based on
paying your capital gains tax. Yeah.
So PPR or principal private residence relief is if I sell my own house that I live in, I don't pay tax if I've lived there
all the time. Yeah.
But if I've been away and it's not for work, it's at my choice because I've decided to be. I've actually decided to go. I haven't been forced to go. I've decided to go to Dubai as a surgeon. I come back after 10 years to sell my house.
Yeah.
And I've lived there, let's just say for the sake of argument, I lived there for 10 years.
Yeah.
And then I went away for 10 years.
50-50.
Keep it really easy. Yeah. So 50% of my house.
Sorry, you get 9 months extra from HMRC.
Okay. I've lived there for
9 years, 3 months.
Yeah. But effectively, it'd be roughly 50%. So 50% of my house, if I come back, I'm surgeon again in the UK again, I'm earning 200 grand a year, let's just say. My capital gains, selling half of my house will be taxed at the 24% rate or whatever it is.
Yeah,
at
the time. Yeah, there are a few little caveats to PPR. Like if you were to move back to that house and live in it for a certain amount of time after you came back and then sell it, you get 3 years for any reason, things like that.
Yeah, there's also there's very little. Yeah,
check. Yeah, exactly. That's it. It's all about checking, isn't it? But let's say I never did, and that's really simple.
Simple case.
Important to remember that you could potentially lose a proportion of your PPR
on one of your biggest assets.
Yeah.
And so planning again. Planning.
It's all about forward planning, I think, and that's the thing with tax, isn't it? People are scared of tax because actually it's the unknown, and because it could be so many different things. And when you do search it, you find one bit of thing that will contradict the other bit of it, and actually it's a bit of a minefield.
Yeah.
Well, whereas that's why we've got experts like you guys, I suppose, isn't it?
We've got a client now. His family's got wealthy, moving to Spain. His 3 adult children. He's going to keep the house they built and they love here because it's got an emotional attachment. It's got a huge capital gain on it because they built it, and he wants the 3 children there because they've got a base here. They're going to be resident in the UK. I said, as you spend more time in Spain, you're going to be resident in Spain. You're going to lose. They've been there about 10 years. You're going to lose your principal private residence.
Yeah.
Could sell it now before you go. Take the cash, invest it, give the cash to the kids so they can buy somewhere or whatever. I mean, you can't let tax drive the
absolutely,
because they've got emotional attachment. But it might be worth actually taking your residence relief now from purely tax free, get that huge gain tax free, which is fair enough. It's your house. And then obviously that money falls into your net for inheritance. That's gift it to the kids or whatever, or invest it as you see fit, or buy a smaller house for the children. But certainly think about that.
If you've got ideas and you're not going abroad, the thing you've got to do is look at all the tax handlers and speak to professionals. I think.
Yeah. I mean, you might be moving abroad for the first time. You don't want to sell your house because you don't know it's going to work out, or you might be back in 3 months or 6 months. So why sell your house? But
Wow.
always think about that. Are you thinking of moving to Dubai then?
I am actually. Well,
once
I've trained as a surgeon, I think that's going to be the way. I think.
Okay, you can do that online, can't you?
Yeah, I mean, yeah, absolutely. But you know, I think one thing we're getting is it can be a minefield with tax, and actually, you know, things that you might consider aren't a problem probably are a problem.
Yeah.
And the more of the problem they are, the more potentially you get penalties for them.
Yeah. It's much better to be aware of what the tax consequences could be, both in the UK and abroad. So just seek advice before you do anything.
Yeah.
And here are the common mistakes that people make. Actually, make it. You have that thing in your back of your mind, thinking, well, actually, that could be something that I'm doing, or something that I definitely am doing, but it's something to be scared of.
Yeah.
I mean, just don't stick your head in the sand. They think if you know, you will eventually get a letter from HMRC or something. Just do it, or you know, some traumatic event, death or something could have your tax affairs in the spotlight, and then it's pulled over probate, and your family have got an issue. So, you know, just don't ignore it. It's better to ask the question, see if there is a problem.
Absolutely.
Not.
Absolutely. Is there anything else that people make as common mistakes for, you know, overseas income?
I've got one for you. So what happens if Neil, for instance, then was to go and live in Spain, but carry on working for my Brutto from there? Where's the tax there then?
Point.
Well, this is a very good point. One which I've got to think about. There's several points here, and I just go on a really complex tax point in that suddenly, if you've got an employee working in a foreign company, certainly senior one like Neil, who's driving the company, you might move your tax residence of the company from the UK to Spain. That's on a corporate level. Yeah. So you've got to be very careful. So maybe the profits you're creating within the company, suddenly the Spanish tax authority say, well, you're living here and you're doing it from here. So that's certainly something you don't want to do.
Yeah, no.
Personally, if you're resident in Spain, you're going to have to pay Spanish tax.
Yeah.
On your income. Yeah.
Yeah.
Because you're working there, you're doing that. Now, I suppose the question is, would you go as an employee or a consultant? If you go as an employee, I think they'd argue that you wouldn't deduct tax and you claim your Spanish residency. And it depends on the double taxation treaty between the UK and Spain and what would happen. But I would think you'll definitely be taxed in Spain. If you were taxed in the UK, you get a credit across. Yeah. I think you'd argue to the revenue that actually he's definitely resident.
Yeah, in Spain, all the duties are being towed on in Spain.
Yeah. So that creates a problem for the company, not you personally.
What about national insurance then for my state pension?
Again, you'd probably look at voluntary contribution. I'm not sure what class you pay.
Yeah.
You might be able to pay class.
Because you already pay class one, wouldn't you?
Yeah.
So you might still fall into the class one. So
I think you might be able to pay that.
Because there are different rules for national insurance and the tax. Yeah, that's the other complication that comes with it.
So when I returned to the UK, I updated my national insurance record as far. You can go back about 16 years at the moment.
Yeah, the window's open, isn't it?
Yeah, it's still open. There's so many people doing it apparently, and the NI contributions while I was abroad were a lot less while I was a resident in the UK not working. So it might be in that case that you do a voluntary thing because the national insurance is the same, but it still counts towards your state pension.
Interesting. That is a really good question, actually, because that's another common one, isn't it?
Yeah, it is. Especially since COVID, with people working remotely more and more. So if
you go and work for 3 months abroad, probably not a problem, depending on the tax rules of that country, you'll come back. But if you're going to live there, for example, in Spain all the time, you're not doing it. Now your company might say to you, actually, we don't want you to be an employee, we want you to be a consultant, and you bill them, and it's a different relationship rather than employee and self-employed. Which might not suit you because you don't want to lose your employment rights. Yeah. So there's many different ways.
Yeah, because if I did meet, you know, a Spanish girl, and I've moved over to Spain to be with her. Yeah. Then actually, you know, I'm gonna want to go on. You know.
Does your wife know about this Spanish girl?
Well, don't tell her this is recorded, but don't tell her about this. Well, if it comes out this way, then sorry. But but no, it's if I was to, meet a Spanish girl and go over and live with her, then that's gonna, that's quite a common thing, though, isn't it? Not necessarily in Spain, but across the world. But people will move out to be with their partners, and people will come in here, to the UK to be with their partners as well. So it's just making sure. I could quite happily, fly on quite happily.
You're digging a hole.
I'm going to be careful here.
One minute you're going to Dubai to be a surgeon, now you're.
It's probably more of a sensible. It's probably more of a sensible one to be the surgeon. I'll see you for your hip.
So yeah, again, planning. Looking at. But you, again, say you did that in that case. You didn't tell you're working remotely. You don't tell your employer. They just keep deducting tax here, and you go there. But should be telling revenue at the point that you're not resident. You do the statutory residence test and say, actually, from the 6th of April this year, I'm not resident because I left. And that's but unless you tell your payroll or something, your tax code's changed, they'll keep deducting tax.
But then when are you a non-resident? That's the thing. People don't consider doing the residency check. They just go, "Oh, I'm still working for the same person."
Still statutory residence test.
Yeah, now people are aware of that, but people wouldn't,
no.
People wouldn't think about that. I'm lucky that I've got you guys that you'll say, "Well, you want to think about doing that actually because you're going to get stung." And obviously, I should know a bit about it as well. But people who are going over there that aren't tax professionals wouldn't have a clue.
And the other, which I've seen, and I've had friends do this and clients, is you go and work abroad. Normally it's a really attractive job and you can't, but the family, spouse and children stay at school. They don't want to take them out. They don't fancy leaving the country the time, and you're flying in constantly, maybe for the weekends. You work in Holland, fly back every weekend, to see the family, etc. Then you've got to look at your days and everything. And there's also HMRC and the statutory residence test will look at days worked in the UK. If you're a foreign company, so you've got to be very careful. You can work 31 days depending on this, otherwise you then create another problem. So look at the days you're working, which is working more than 3 hours. This is a famous case of people turning off on their computer, work offline, because HMRC will monitor that. So you say, I'm working for 3 hours, and you should work for 3 hours. But obviously, digitally now they can look at your calls, records, emails. So actually, you were working at 9, 12. For you working all day, so make sure you keep a record.
It's not 3 hours increments. I turned off at 51 and I got 1 minute past. It doesn't quite work like that. It's 3 hours.
And you can just look at the history of someone. And obviously now, HMRC can see flight records and passport control. When you're in and out of the country.
So everything's electronic now. They're meant to find anything electronically of your work point of view. Then it's your passport, your car, all those sort of things they can see what's going on with. Just the ways to hide are getting harder now, aren't they? So it's just easy just to come forward with it, because at some point they're going to send you a letter, and once the letters come, it's even harder to be able to
defend anything.
The penalties are at the highest. So.
And in that case we just talked about, you have the conversation with the family. You say, right, we don't want to leave the UK. Then you've got to take even more advice. Do you think, right, can we be back and forth? And it's probably just the case that you would be a UK resident. So don't even start going down the path and
trying to avoid it, because sometimes when you do try and avoid things, you get caught short.
The other thing I'd say is, over my career, I've seen a lot of people who travel the world, and when you ask them where their tax residents, say, well, I never do my 183 days anywhere, which is, you have to be tax resident somewhere. I always say you have to hang your hat somewhere. So you've got to be resident somewhere, because when you go to open a bank account, get a mortgage or whatever, they'll say, oh, so you're resident where, and we need your tax identification number. If you're suddenly a tax nomad, you've got a problem.
Well, exactly,
Or if you're from the UK and you haven't lived here, you say, well, I'm British, I'm from the UK. Well, are you a UK tax resident? And you're like, and you're not. Or if you say you are, then you are. So you've got to be tax resident somewhere. So have some planning. You can't just wander the planet with your surfboard and go,
Well, they try.
Well, if you've got, depends on your level of income. But you've got to be resident, and people do move around the world now. They're more, you can work from anywhere. So you've got to consider where's the best place to do it. And family, think about your family and what you need to do.
Wow, that's been really interesting.
Right.
Right, thank you. That was really good.
So thanks for joining us today. Hopefully you found it interesting. If you are looking at moving abroad or working abroad, get in touch and drop us in WhatsApp on, what's that number, Neil?
01905 777 600.
Until next time, thanks everyone.
Thank you.